Hey, very good morning. Welcome to our weekly live room here at binary.com. So glad that you can join us on the 2nd of September 2013. And that is special because it is again a new month. September has kicked in and we'll probably have different type of trading, more lively movements because summertime has, or at least according to the trading world, has ended. August is always a very slow and a tedious month of trading, as I have warned in the last month. So definitely September, different things going on, and we'll see different movements. But before we dive into that a bit more, I should mention that starting from next week, we'll have the webinar again at the usual time of 7 a.m. UK time. So just in case that you're aware of that, 7 a.m. UK time, that is 6 a.m. GMT next week. All right. So binary.com hosting today. My name is Chris, and this is the risk disclaimer, of course, explaining that trading is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. So please pause the video to read the entire disclaimer. Welcome back, and I do thank you for your attention on that. So this is the live market commentary where we take a look at the Forex market. It's going to be weekly live on Mondays at 6 a.m. GMT or 7 a.m. London. As I said, we record it, and if you want that recording or you want to know when the recording is available, take a look at blog.binary.com/weekly trading room, and you can register just by your name and email address, and you'll get a heads up when this recording is ready, and you can watch it whenever you want. So today we're going to take a look at the calendar and then at these currencies. So the calendar this week, today, in fact, Monday the 2nd is a day off in Canada and US of A. So that could be or mean a slower trading day today. The rest of the week we have, for example, a odd cash rate tomorrow. That will be interesting. It's expected to stay 2.5. Still, always a volatile moment when news releases such as the cash rate or interest rate are announced. The same is actually true for the CAD on Wednesday, where the overnight rate, as it's called, would be released, and as well Thursday for the euro and the pound. So there's a lot of interest rate announcements this week. That's Thursday for the euro and pound. And Friday we have non-farm payroll and unemployment rate on the USD. So the entire week quite heavily filled with news events. It is also the first week of the month. That too makes it a bit more difficult to trade, just that you're aware of that. And those kind of things always occur when we have a first week of trading. So let's over to the charts. I'm looking at the pound dollar at the moment of the month chart. And you can see that I'm looking at this triangle. And basically the pound has broken that triangle. You can see the bottom of this monthly triangle has been broken, this monthly wedge, hanging pretty bearish as you can see, because if you compare it to this down move, the triangle itself is right at the bottom of that base. So many traders are looking at this as a break and seeking to see if this could be a continuation of this down move. Now this is a monthly chart, so these things don't have to pan out or happen immediately. There could be a large time factor here before this could happen, and it could be maybe something different is going on. Maybe the currency is making a correction and doing like this. So that always remains to be seen. We did break out of it though, and we've gone sideways ever since. So there's a box right there. Usually something like this happens, but that's just a statistical probability. That does not mean that it always is so. So it is going to be interesting to see if the currency can break the 148.50 bottom in the long term, and if it will respect the 157 top. If it doesn't respect the 157 top, there's still resistance between around 160 and 162. 160 is the psychological number. 162 is the top of that range or wedge. Okay, if we break 148.50, 142.50 is a bottom, Same holds true for 135 and 140, the psychological number in between that. Now last month, if we zoom in a bit, last month was a small bullish candle, positive though, right? Because we see that, well, actually it was 600 pips. It wasn't that small, in fact, but it was some wick at the top and a bit of bullish. So not a clear signal as yet. I mean, the months before had massive wicks at both ends, in fact. So a lot of indecision. July had a bit more buying pressure though. June had a bit more selling pressure, as you can see. So it's still remaining in that zone. We've had 6 months of price action hopping about or between the green and the red level I have indicated on the chart. So it's in a tight spot for 6 months. We'll have to see which way it breaks out. Let's zoom into the weekly chart to see if we can see a bit more directional guidance within that zone. Within that zone, you can see the down, up, down, up. So there's space maybe back to the bottom here. One more fall back. That is possible. We've had 2 weeks of downside already. So we'll have to see. If we break, for example, last week's low, that could be an indication that we're going to make the downside back to the bottom. All right, so there could be a couple of weeks of downside if that would happen, for example. Key for maybe the upside is not last week's high, but last 2 weeks high, right? Because that's at around 157.20. That could be key for the bulls and bears for upside. And we can see maybe some upside motion up to 160. Let's go to the day chart. Day chart, you can see that we're in a range here on the daily chart. And if we put a trend line on these bottoms like this, we're either right at the bottom or we're about to break. So we're at an interesting talking spot. We did have a pretty big wick here on the day chart, indicating that maybe there will be some support in this area. We are getting a push up. So is this a push up to fall, or is this a push up to break to the upside? We'll have to take a look at this green line. I'll adjust it like this. If we break that green line, we're probably going to make that fall. So that's the pound dollar. Let's scoot over to the euro dollar and take a look at the monthly chart there. See what it says to us. Euro dollar is significantly different than the pound dollar because it has a wedge, but the wedge isn't after a down move. The wedge actually happened after an up move. As you can see, price was moving up. And in fact, the wedge was built at the top there. Okay, so if you look at that like this, upside, and where's the wedge? Right here at the top of that uptrend instead of the downfall. So there is a difference there with the pound. Of course, the wedge is still the same though. Definitely a very big wedge, already 5 years in motion. So the question is, are we going to go, if we zoom into that wedge, are we going to go to the top of the wedge and fall, or are we going to break that smaller wedge in here and go back to the bottom of the wedge and maybe fall and break to the downside? All right, or are we going to break to the upside? Those are the scenarios. We're kind of halfway here basically, so we still have space to the top of the wedge or to the bottom of the wedge, and in both cases we have to see if a break of the wedge will happen. All right, so we're just in the middle. That explains that. Personally, I wouldn't be surprised from a technical point of view to complete the wedge by making a 3-wave to the top and then falling. Now the fall has to do with the fact that we fell here at the very beginning. We're making a correction like this, and we'll complete one more fall by going to the downside. So my bias is a completion to the top of the green line at some point in time and fall from there. And in that case, we'll have a 1. This will be an A. this will be a B, this will be a C, this will be a D, this will be an E to complete wave 2, and we go down for wave 3. So that would explain that scenario. I think that is the main scenario, and that is probably the most common referred scenario for the euro dollar. Will that necessarily occur? No, that doesn't necessarily mean it has to. That's why we have those key lines on our charts to keep an eye. Which lines will be broken, which lines will be not broken. So we have a good indication what at all times the most likely scenario will be. But at the moment, this is the most likely. The 1, 2, 3 motion here to complete these 3 waves, and within the green correction, the up move to finish E of 2. Those lines, we'll talk about those key lines. Key lines here are 134.50, because if we break 134.50, last week's high, that's an indication that we're going to the upside, or 137. If we break those levels, you can clearly see that we're probably going to make the upside to the top of the wedge. Now for the downside, last week's low at 131.70 is important, and otherwise, of course, 128 bottom here is very important as well. If we break those, we'll probably be traveling to the downside, back to the bottom of the wedge at around 121. So those are the key lines to keep an eye on, because if those key lines are broken, then probably we are going to move down or up. Now, last month was a very small candle on the euro dollar. It was only 270 pips, which is extremely small for a monthly candle, and it was bearish. Now, if we zoom in a bit more to recent price action, you can see that here too, just like the pound, we've had more or less 6 months of a very relatively tight range. So the majors have not traveled much. We'll have to see if and when that breaks and starts to change that pattern, and maybe we'll see more volatile moves. Will that be this month? We'll have to see. The key lines that I'm looking at. But really, the price action is not saying much at the moment, just because it's a range type of environment the last 6 months. Let's take a look at the weekly chart. And the week chart just confirms that range where we're bouncing back and forth between those levels. Last week was a very bearish downside candle, so that would give a more likelihood of a fall at the moment. You can see there's some momentum in the market at the moment. Considering the fact that we are in this range, if we break last week's low, you can see at that weekly candle, there is that probability that we'll make some fall after we break that. Okay, there wouldn't be that much support left because we're on a range, not in a trending environment. So most likely there's not much support until we get all the way back to the bottom of that range. The chances of the currency finding a support are small. Now, of course, we do have a 130 level. That's always something you want to be aware of. Other than that, a chance to back to the bottom is quite high. Let's take a look at this day chart. You can see we had divergence between these tops. And we broke the 132 support already. There's still 131.90, so there's kind of a support area right in there, in that zone. So price hasn't really broke it significantly. It was just a few pips went through it. So that's why I said keep an eye on this last week's low, because once that is broken, that will be the confirmation of this divergence playing out on the day chart, and we're probably going to make that fall. Looking at the speed here, it seems likely to me. But you never know, we could get a pullback, and maybe a head and shoulders pattern like this could occur as well before we fall as well. So something to keep an eye on. 131.70, very key, just like 134.50. In Elliott wave terms, for those of you who like that, there's two possibilities here. In fact, this could be an A, B, C for A. This could be a A, B, C for B, and we go up for C, and then fall. Or, in fact, the green E that I talked about just a while ago is finished here. And this is actually that red downside, the third wave downside. In that case, this would be 1, 2, and we're going down for 3. That's one possibility too. Or this is an ABC finish right in here, as I already said. And we're making C right now. B finished, for example, right in here with the A, B, C, and we're making C now. Also possible. So we have to keep an eye on that, as I said, these levels, to see which one of these 4 levels is primarily, to see which one of those is more likely. Let's head over to the Aussie, the Australian dollar versus the US dollar. And you can see we've had a lot of downside here on the Australian dollar, of course, falling from all the way from 106, 107 to 87. That's a 2,000 pip fall, and that was predicted by myself. So before it happened, so that was nice trading. We're right at a potential target. Although, if you look at this Aussie, you can definitely see potential for it to fall to the 50 fib and the minus 618 target at around 83.85. Okay, we've had 4 bearish monthly candles in a row, and especially the first 2 months, a lot of downside. The last 2 months has slowed down just a bit. So here too, last month's high at 92.20 and low at 88.60, definitely crucial. Like any currency, of course. But definitely, if you zoom into that candle of August, still bearish, as you can see, with a pretty big wick at the top. I'm talking about this one. All right, pretty big wick, bearish close. Nothing indicating as yet that this trend will stop. And there's the difference here between the Aussie and the euro and the pound. The Aussie clearly in a trending mode, and the euro and pound clearly in a range mode. Now that doesn't necessarily mean that that will stay like that this month, but the trend is always a hard thing to change. And once it is in a trend, the trend can always last longer than anyone can imagine. So if you probably would have said there would be a downtrend on the Aussie 4 months ago, probably a lot of people would have laughed at you. So it's good never to underestimate the potential here of the trend continuing. At some point, however, it will stop. That's a rule. It won't last forever. The question is when. And will it be September? Will it be October? That remains to be seen. I do think that this last month's high and low will give an indication of that. If we break last month's low, we're continuing. If we break last month's high, obviously we're correcting in a bigger fashion. Okay? Now, if we break last month's low, we have 85.50 and 88, 83 and 80 as targets, and we should expect another month of downside. Okay, or this month's low or close to be lower than last month's is a probability. Let's take a look at the week chart, and you can see that downside more clearer. Obviously, very nice. We're right at the bottom, so that's tricky, risky area, I should say. Because a bottom always can give support for the currency to move up. All right. We could put, for example, trend lines here as well. And you can see when maybe this triangle will be broken and to which direction. This is the day chart. Same thing, okay? We've continued the downtrend, but you can see the speed and the angle of price has weakened, okay? Prior to that, price was moving very fast to the downside. You can see of late, we've had continuation to the downside, but we've also had some upside. We've also had many candles go sideways. So the entire movement is definitely at a slower pace, okay? So maybe we can get upside here back to the top of the trend line, and we'll get respect there. And either we'll be building a wedge that most likely will be broken at some point to the downside then, or if we do get an aggressive up move, maybe even a bigger correction. So these are major lines, and these two green lines, and then the 92.30 resistance, and an 89 and 88.50 support. Very important, because then we'll know which side we're going. I'm only looking for shorts either from the top of that wedge, or if we break the bottom of the wedge, okay? And longs, I'm really only looking for above the resistance. All right, so that's what I'm looking at, how to trade this Aussie dollar. Let's head over to the dollar yen. The dollar yen, you can see, of course, that massive trend to the upside. Of late, we've been stalling here on the dollar yen, making this triangle, as you can see right here with these purple lines. Okay, so the triangle, the question is, how long can this triangle last? Contrary to the Aussie, we're not in a trend at the moment. And if we put the oscillator on our chart, you can see that the trend might continue sometime soon. It could be September, because if you look at this oscillator, it's almost back to the zero line. That could indicate that this correction is finished and we're ready for that one more upside. All right. Now, if you look at the trend so far, we've had 1, 2, 3. So this would be wave 4, and we're going to finish wave 5. What would be the target of wave 5? We put a fib on this wave 3, and you can see that the minus 272 target is at 111, basically 110.96. All right, so that's the space that this dollar yen could do. That's a massive space, so that would be definitely worth catching and waiting for. That could happen on the dollar yen. This is a continuation triangle, so that would be a great trade. All right, you can see clearly the currency bounce off the 382, and the likelihood of this top being broken after such impulsive moves up is very high. So let me zoom back to the month, up to the month chart here. The month chart itself had a doji last month, okay? So there was no significant direction in the dollar yen. It was a 400 pip candle, pretty small for a month candle, and it was open and close roughly at the same spot, so there's no direction on that. Now if we zoom out, you can see, if you connect the tops, that there's a red resistance line right at that 111. So what we're looking at here is a 1, 2, 3, 4, 5 to that red dot, red line, okay? That would be really a great trade. So maybe there'll be one more continuation trend trade here on the dollar yen. That would mean dollar strength. That would tie into the fact that the pound is at the top of the range and the euro is closer to resistance than support. So maybe the dollar strength could push those lower as well. And the Aussie is already in a downtrend, so if there's more dollar strength to come, then the Aussie downtrend could continue as well. So, alrighty, so let's zoom back to the day chart. can see this triangle a bit better, or wedge. The wedge would be something maybe as, depending how you read it, this could be an A, B, C, D. No, that wouldn't make sense. Excuse me. This would have to be A, B, C, D, and E. All right, so I'm just connecting these 2 points because it's a neat trend line. It's not part of the wedge though. Okay. So this could be already the finish of E, or maybe we make one more push down to complete the E. That remains to be seen. The key area for that is this trend line, which actually price is right at. And of course the resistance, horizontal resistance at 99. Very important. For the downside, we have to keep an eye on 95.80, because if we break 95.80, then something else is going on. Maybe we're making a deeper ABC correction instead. This could be A. This could be, for example, B, and we're going down for C. All right? And then we still maybe go up. That would only be so if we break this bottom though, at 95.80. Otherwise, definitely you can see the lower highs, but also the higher lows. So when we see that, we have to assume a wedge. And because we had an uptrend before that, especially the break to the upside and the continuation is the best. So 99 is a key level here on the dollar yen. Also the weekly high at 101.50, very important. That's the weekly resistance. And probably the 100 level, you can see there's a resistance level as well. So those are resistance levels, but for me really key is 99, because once we break that, there will be pauses at these resistance levels, but we'll probably see a pullback and continuation, is my expectation. Okay, let's take a look at gold, XAU USD. We had a bullish month last month. That's the second one in a row. So indicating that there is some turnaround probably here at this gold. We already had a very strong correction. The question was how strong or how far could this correction go? And we went all the way almost to the minus 1,000 target. That's why I still had the idea that we can make that small push, hit that 1120, which is also the 50 fib of the entire up move. That hasn't happened. So, there's just already there was too much buying pressure already at that level. Too many people interested at the cheap price, probably they think for gold, and we had 2 months of upside. So this downside is temporarily in the fridge, and that could be the turning spot as we speak. Okay, we already had 2 months of bullish price action. Obviously, after 2, 4, 6, 8, 9 months of downside, that is important information to note. So let's take a look at the week chart. Now, if we look at this week chart, you can see we had a bearish week last week actually. Pushed all the way up to 1430, but we had a wick at top. Okay, there's a wick at the top of the weekly candle. And we already fell today, although the market just opened, we already fell and moved up again though, some $20. So last week's low has already been broken. Okay, so there could be a small fall here to retrace this upside, and we'll make maybe one more upside like this. All right, this could be maybe the moment that the currency has reversed. It is possible we could have made, for example, if you count this downside, this was an A, B, C probably, and within the C, we probably made 1, 2, 3. No, sorry, 1, 2, 1, 2, 3, 4, 5 for 3, 4, and then a 5. Now the other alternative would be a 1, 2, 1, 2, 1, 2, 3, 4, 5. For 3 to finish right in here. One more time, sorry. 1, 2, 1, 2, 1, 2, 3, 4, 5. That means 3 is finished here, in fact. Okay. And we still have a 4, 5 left. All right. Now, because of this strong up move, I wouldn't say that is the main scenario at the moment. As I said, it's probably a likely bouncing spot at the moment. But you never know. So that's why it's good to keep an eye on this signal. We already broke, we had a pretty big wick there, and we already broke last week's low, so there could be some downside pressure in any case. Now we do want to be aware of the support level here at 1270. If we break that, then the bulls are not in control anymore. And especially this 1180, of course, if that bottom were to be broken, then gold is definitely in a downtrend. For the upside, I would say anything, if we move down here, we should definitely expect support, because it's somewhere around here or a bit lower here because of this potential 3-wave up, at least. Okay, so downside at the moment, there is some probability for that, and if we do move down, then there's probability of support as well, like that. Alrighty. We can take a look at the day chart to see and investigate this up move a bit more closely. Difficult to see. Let me take a look at the 4-hour chart, because I want to see how this move has really traveled to the upside so far. If we look at this upside, it does look impulsive, because if you look at the waves, 1, 2, 3, 4, 5 potentially, 1, 2, 3, 4, 5 potentially. This could be 1, 2, 3, 4, and this could be probably 5 waves as well. It is looking more impulsively if I look at this 4-hour chart to the upside. So that would mean any move down is likely going to find that support for upside. And will probably not break this 1180 bottom. If I look at this 4-hour chart and I count the waves and I analyze how the currency has moved to the upside, I would say that there's a higher statistical probability than the other way around. Okay. And if you look at let's take a look at the escalator here. Now, another way of counting it is seeing this as an entire ABC, which is possible as well. So that's why we have to be aware that both down and upsides are sometimes good to trade. You can see maybe this type of motion as well. We can put a fib on here. The currency missed the minus 618. If you do this. But if we fib the third wave, it did stop at the minus 618. So that just adds one more element there, that this is probably a bit more like a 5-wave than an ABC, because the target was hit in the latter scenario if we fib the third wave. And let's go back to the 4-hour chart. Alrighty. So we have to see, of course, if which one of the two is true. But looking at the impulse, I would say that in any case, if we move back down to support and we can fib the entire up move for that, and any of those fibs could be a bouncing spot. Okay, it could be the 618, which is aligned with the bigger daily support anyhow, or it could be 786 or the 886 or the 50. All of those are support levels that could see that bounce and continuation all the way to 1600 with a pause at 1500. Okay, so that's something that could be very interesting on this XAU USD. Downside to those support levels, and then we have to be careful of the bouncing spots in any of these fibs, basically, primarily the 618. And then when we move up, be careful of this resistance. If we break that top, we're probably continuing. Okay. So that wraps it up. Let me go to our website here, Better Markets or binary.com. Go to Start Trading, click on Forex, or any of the types, indices, stocks, or commodities, which one you like. And you can click on any currency you want, your starting time, the duration, and the payout you seek. And then you can see how much the purchase of the fall or the rise will cost you and what your return is connected to that. Okay? Great. So that wraps it up for today. I thank you for your attention, first of all. And if you have any questions, please let me know. In the meantime, if you want to be aware of this recording when it's ready, we'll be here next week again, the 9th of September. We will be here 1 hour later, as I said. So not 6 a.m. UK time, but 7 a.m. UK time. And if you want to get a heads up when this recording is ready, go to blog.binary.com/weekly trading room. And if you just type in or punch in your name and email address, that's all we need. And you'll get a heads up when the recording is ready and you can take a look at any time. Now, this is long-term analysis, so no problem if you watch it the day after or even a day or two, especially this one because it is even a monthly analysis. So I don't see any questions, so I do thank you one more time and wish you all great trading this week. And looking forward to see you next week. Cheers, everyone.